Welcome to Wall Street Sizing Up. We're glad you're here today. Bitcoin and blockchain. That's right. We're going to talk about Bitcoin from a hedge fund perspective and a Wall Street perspective, and then we're going to talk about two stocks we really like that use blockchain as well. So with that said, it's going to be a party. Hit that like, hit the subscribe, Jake, hit the theme, and let's hit the casino. Let's go, guys. All right, let's go to work on Bitcoin. It's at about 15.4. It's trading between about 15.7, 15.8 down to 15.2. It's broken that a couple times, but we are in a bull market. It seems this year that bull market started around March. As of the 1st of September, it really kicked into high gear. You can see here that back in literally the last day of 2017, it went to about 16.5. And of course, in 2017, we all remember that it went to 19,000. Just to let you know, I've been buying Bitcoin since it was $450. I bought it 10,000. I bought it 14,000. I bought it 3,000. I bought it 5,000. I bought it whatever it was. I dollar cost average in. But here's the key. One of the things is that back in 2015 or 2016, I was buying it at $450, right? $450, and then they sold 3 tranches from Silk Road, 20,000 Bitcoins each. And Draper picked those up for $515. He paid about a 10 to 15% premium, and I thought he was nuts. That is now turned into Coinbase, of course. But here's the thing, guys. Almost all of these are public companies. But you've got Wall Street. Wall Street is seriously stepping in. Like, we've all known about the Mark Yuskos. We've all known about the Kathy Woods at ARK Invest.
Duh.
Right? But we've got serious titans of macro investing, serious titans of Wall Street, right? Paul Tudor Jones has come out. Stanley Druckenmiller has come out. Mike Novogratz has been a bull for a long time. You might not agree with his personal opinions, but the man, you got to respect that he's a bull for Bitcoin. Abigail Johnson, CEO of Fidelity, right? She's been messing around with Bitcoin now for going on 5, 6, 7 years. Jack Dorsey at Square. PayPal's coming out. Again, this is not a transactional cryptocurrency. It is more a store of value, an immutable store of value. It's like walking around with gold in your pocket. Most of you guys know that, right? But look at these public companies here who have bought Bitcoin because they're afraid of inflation. The one that was about 2 or 3, 4 months ago is the one at the top, MicroStrategy. They have bought almost $600 million of Bitcoin out of their cash, right? That's literally, most of that was their working cash that they had on the sideline. They're a software company, but that's 1/3 of their market cap. 1/3. You got Galaxy, Square, Voyager, Riot, blockchain. So most of these guys, if you're in crypto, you actually know them. But here's the thing. Here's how you know hedge funds are jumping in, right? Hedge funds have to have, by their corporate bylaws, a custody solution that takes care of the investor were things to start to go sideways. Look at all the custody solutions here. These are the top ranked ones. BitGo, Coinbase, Kingdom Trust. You know these. Gemini, Bakkt. We've talked about these. They continue to grow. The numbers continue to grow. That's how you know hedge funds and institutional investors are jumping in. And then if they can't get exposure to Bitcoin directly, maybe because of their bylaws, what are they buying? GBTC.
Of course.
That's right. Grayscale Bitcoin Trust.
Of course.
Grayscale Bitcoin Trust. You can see here, they have $8 billion under management at Grayscale Bitcoin Trust. 96% of their assets is in Bitcoin. So essentially, their stock follows the price of Bitcoin. And so that's how these hedge funds and institutional investors are getting exposure to Bitcoin. But look at that. 57% of their stock is owned by institutions. If you look at the big ones, you got Three Arrows Capital, Horizon, Churchill, ARK, big time investors. Remember, guys, Bitcoin is it's a $500 billion asset class. Bitcoin right? That's crypto. Bitcoin is a $300 billion asset class, right? And so it's literally 66% of all, or 60% of all crypto, right? And it has grown. It's been the best asset over the past 10 years. I just looked this up. It's grown, are you ready for this? 12 million%.
Damn!
So if you're not jumping in, you probably need to jump in. But understand, I would only invest what you can afford to lose, because it could absolutely go to 100,000, but it could absolutely go to zero. Let me say that again. It could absolutely go to zero, right? So for me and my risk tolerance, I can buy Bitcoin, but I buy it in very, very small chunks. And again, I dollar cost average in. I think that's probably the smartest way for anybody who's not an institutional investor, right? These institutions can jump in with, if they want to, hundreds of millions of dollars and take Bitcoin, whether through GBTC or through Bitcoin directly. So again, it's not a transactional currency, is a store of value. It's an immutable store of value due to blockchain, and we'll talk about that in a minute. But again, only invest what you can afford to lose. That's one. And two, understand it's a long-term investment. A long-term investment, right? It's taken it 11 going on 12 years to get to about 10,000, but it's gone through some serious beta, some serious volatility. I mean, I remember it going to like 10 and then dropping all the way back down to 3, right? And you got to have hard hands, right? So if you can't handle that type of risk and that type of volatility, this asset class, Bitcoin, is not for you. But if you can, hold on, because it's a hell of a ride. Let's talk about blockchain. All right, let's talk about blockchain first. First of all, 45,000 foot level of blockchain. Blockchain is a decentralized, distributed, it's many times a public digital ledger that consists of records or transactions that go into a block, right? And it could be several nodes, it might be hundreds of nodes, it might be thousands of nodes, and they all keep their own separate ledger. But here's how they keep it together. When a transaction comes in, it gets hashed. And the hash of that transaction is a set number of letters and numbers. And then that hash gets put into the next transaction's hash, so on and so forth, until the block fills up. And the block might be 100 transactions, it might be 1,000 transactions. But the whole block gets hashed, right? And that hash is then added to the next block. And so what happens is if anything gets changed retroactively, then it would change all subsequent blocks, right? And so the blockchain ledgers are a very secure means of storing data, since they cannot be modified, like I said, retroactively. And they can be used anonymously to protect the user's privacy, because there are public and private blockchains as well. Now, so what do these typically help with? Digital IDs, who you are online, rewards programs, copyright protections are going to be huge, digital voting. Heaven help us. If in 2024, if all 50 states don't have blockchain digital voting, I know a few states do now, we have got to get to that point clearly. Real estate transfer, this is the stock that we're about to talk about. This is huge for them. Medical records are the same way, and wills. Some of the companies that are using blockchain right now is like IBM, Microsoft. I mean, these, you've heard of them, right? Yeah, you know me. Anheuser-Busch, Mercedes, Goldman Sachs, BABA uses it, JD uses it, but the stock we're talking about today is DocuSign. And DocuSign, the reason that we like DocuSign, it's at 198. DOCU is the ticker, DOCU. It's at 198 today. If we go full screen the chart. Literally in 2019, for most of 2019, this was a $50 stock. It is now right at a $200 stock, right? So what do we like about it? First of all, it's a business-to-business software company. That is what they do, right? But why are they so great? Well, here it is. We all know this. Electronic signatures save time and money for companies and individuals. We got that part. An estimated $36 reduction in cost of doing business per transaction is what DocuSign saves the company that uses their software. DocuSign actively uses blockchain technology in its business, allowing customers to record their agreements on the Ethereum blockchain with smart contracts, right?
This is brilliant, but I like this.
So if Walmart has 1 million contracts a year that it needs to do, right? It doesn't need to use the USPS. It doesn't need to use FedEx Next Day Air. You can do it online. And you save $36 million. Crazy, but it gets even better. So like I told you, they are a software company, but they're a business to business, and this is what we like. The company added an amazing 160,000 customers. Out of that 160, 24,000 of those were large enterprises and commercial customers that make up 88% of its revenue. Those customers grew 32% over the period to reach 99. So of all of their customers that they have, and it's close to like 250,000, 100,000 of them are corporations, right? Which will provide a significant opportunity for this software as a service specialist over the next few years. The company won't release its fiscal 2020 third quarter earnings until December, but the thing about it, if you look at its fundamentals, and that's where we go again, it's 198, but let's look at its fundamentals. What we like about it is a couple things. There's 37 hedge funds or funds that we know own it that we follow. But if you look at the share statistics held by institutions, the percentage, 77%, almost 80% of all their shares are held by institutions. That should tell you where it's going. Now, it's not profitable, but it did bring in $1.1 billion. They've got $670 million in cash. Now, they do have some debt, but their operating cash flow is $220 million, right? So this company is poised for growth. They're not making anything, they're reinvesting. The price target on this, from what Yahoo says, is 251. Now, if you go to FinViz, you'll see several banks. We're seeing the most at about 280. We've even seen it as high as 290 as the price target. So again, DocuSign, we really like as one of the top blockchain companies out there now. DOCU, that's DOCU. Next up, I think you'll like them. NVDA. You can see the stock here. So literally last year, it was about a $130 stock. Now it is a $500 stock. It's gone up about 166% on the year. We still think there is room to grow, and here is why. One is blockchain. Let's just talk about it first. Nvidia is the leading manufacturer of graphics processing units, GPUs, right? These GPUs power artificial intelligence, autonomous vehicles, gaming is huge for GPUs. But GPUs are key hardware components of cryptocurrency mining. In a nutshell, miners use specialized GPUs to process transactions on the blockchain and are rewarded with newly minted digital coins. So they have these mining rigs. And in these mining rigs, you can put 5 to like 20 GPUs depending on the software, right? And GPUs, you spin them up, right? And really the fastest rig wins the block reward. And that's what this is talking about. But to take it a step further, though, is that Nvidia, so its rise to prominence is really in the gaming field. So the GPU firm, it mostly served the booming global video gaming space. That's estimated to be a $200 billion market in 2023, literally in 2 years. And clearly it's set to benefit. It's also set to benefit from data centers, cloud computing, and AI, which we've already mentioned a couple times. But
I'm a cybernetic organism, living tissue over a metal endoskeleton.
they're burning the candle at both ends. So they're bringing in more revenue with all these new markets opening up, but they're also acquiring companies that they need. So they acquired ARM Limited from SoftBank. Nobody knows who they are, but ARM is one of the most important behind the scenes companies in the market. It designs and licenses the basic blueprints of chips that consume the least amount of energy on the market, which are used in roughly 90% of the world's smartphones. That is huge. So they see in the third quarter stronger revenue. They believe it'll hit 4.42. I believe their earnings come out very soon. If not this week, next week. On Yahoo Finance, the stock's valuation is, they say it's a tad stretch, but investors have been willing to pay a premium for years, and Nvidia appears to be worth that, considering a longer-term bet on secular growth trends within tech, right? So we've talked about that. The price target's at 571. You're sitting right about 500. We've seen price targets as high as over 600. Right now, we have seen some downgrades to about 570, 575, 560, but for the most part, they're all around the 570. If you look at their financials on a trailing 12 months, they did $13 billion last year. But here's the thing that we like to see, right? The percent of shares held by institutions is 70% of what we follow. We have got 50 hedge funds that actually own Nvidia or Nvidia. They have phenomenal margins. They're growing at a incredible rate. They have about 11 billion in cash. They have about 7 billion in debt, and their operating cash flow is $5.58 billion. So again, the margins are great here. We see the markets are great. We believe that the price target is there. We believe the price target could be 600. Again, this is one of the best blockchain bets. This is one of the best tech bets out there right now. The list of hedge funds that owns this company is, you would recognize probably 50% of them, right? And so that's why we think Nvidia is one of, or if not, the premier blockchain company, because it does so much with their GPUs. With that being said, guys, thank you very much for sticking with me. I hope you like this blockchain and Bitcoin commentary. Hit the like and the subscribe if you would. Watch your six. Go hard in the paint. We'll see you next time. Thanks, guys. Well, good day, good evening, and whatever time it may be. We hope you enjoyed that video as much as we enjoyed making it. Please hit the like or the subscribe or leave a comment, because we love that feedback. And you know what we say. At the casino, you got to watch your six and you go hard in the paint, guys. Cheers. We'll see you next time.